Let's check in on some of today's top trending tickers now, starting with Tesla. Those shares are lower after Deutsche Bank cut its price target to $285 from $300. Analyst Emmanuel Rosner there says the EV maker could miss third quarter delivery and production expectations. The larger risk with Tesla, he says, is the downside expectations for 2024 on both growth and earnings. And Josh, I think safe to say Rosner's one of the more closely watched analysts who covers Tesla here. And it is interesting when he says his base case for Tesla is that it'll guide to about 2.1 million deliveries next year. Consensus is 2.3.
Yeah, what he says here is interesting because basically the note summarizes how there was this Deutsche Bank Investor Day, and what he heard at that Investor Day was that Tesla may no longer plan to expand output in Austin and Berlin factories. So he thinks Tesla will forecast, as you said, 2024 deliveries below the street. But he kind of sees a silver line there. If they're going to, he says, not push so hard on volume, maybe he says that could be less pricing pressure. So he still rates this a buy.
Right. So maybe he says those automotive gross margins that people are watching so closely for Tesla could start to improve a little bit. We'll see. Well, sticking with EVs, let's talk Lucid also. Those shares are higher on the news that the company is going to open the first ever car manufacturing facility in Saudi Arabia. To start, it has the capacity to assemble 5,000 Lucid vehicles per year. Once finished, it's expected to have the capacity to produce a total of 155,000 EVs, Lucid EVs, per year. So that would be significant. You know, it's interesting, the location of this. Lucid are they're a luxury EV. They're priced above, say, a Tesla, for example. So they obviously see in the Mideast potential for a big market.
And remember, interestingly, we saw those reports not long ago that Saudi Arabia was talking to Tesla as well about maybe setting up a manufacturing facility, though, of course, Elon Musk quickly shot that down.
Yeah, but I mean, you have to think about the backdrop as well for Lucid, but also for Saudi Arabia. Many of the oil-dependent Mideast countries are now trying to expand, to diversify, and to pivot away from being so reliant just on oil. So this and the outreach, perhaps, to Tesla, even if doesn't come to fruition, looks like it's to that effort.
Exactly right. And then last one here, shares of Cloudfare moving higher today as the cloud and cybersecurity company is joining the AI train by launching a new collection of products and apps. These will be aimed at helping customers build, deploy, and run AI models. And this name, so really the headline here, Julie, is that the company announced this partnership with Facebook parent Meta. And the idea is, from what I understand, Meta will make its AI coding tool, Llama 2, right, available to developers building AI apps on Cloudflare's developer platform. So some are arguing that is good news. Maybe that means more recurring revenue. Maybe that means more usage.
Right, more usage, exactly. I mean, where we are sort of in this AI cycle is interesting, right? There's all the enthusiasm that happened in the beginning of the year. Now we're squarely in the product development and monetization phase. And so the market seems to be reacting positively when you get actual products that are being introduced.
And then someday maybe actually fresh revenue.
Yes, making money from those projects. Exactly. All right, let's talk about NextEra Energy. It's sinking today after the company reduced expectations for its limited partner distribution, now estimating per unit growth rate to be between 5 and 8% per year through at least 2026, with a growth rate of 6%. This company owns wind and solar projects. It's also a utility provider. And the company also announcing a sale today, by the way, also of its Florida City gas utility for $923 million in cash. But that's not, it seems, outweighing some of that other outlook news that the company came out with.
And by the way, just bring us back full circle, talking Fed, the CEO saying it is tighter monetary policy, higher interest rates affecting the financing need to grow distributions at this 12%.
Yeah, really interesting there as we start to see some real concrete examples of the effect that higher rates are having.